Hi there, welcome to the Alpha Wave Trader. Week ahead. I'm actually recording this on Friday due to the long weekend. I hope you've had a lovely long weekend, but I don't know what's happened in the US on the Friday night, unfortunately. But we are seeing some weakness in the S&P at the moment, and I think it's just interesting to return to the S&P for this chat, just to go over, what I was saying in my previous updates, and to see how things have been panning out based on where the resistance should have been. I think we are starting to see a bit of selling pressure from the area that I pointed out. So I'll just recap on a few things and then have a look at where we are now. So looking at this chart of the S&P, this is a weekly chart. So we can see the whole rally from 2016. And the thing I want to draw your attention to is, all of these boxes here, which if you haven't watched any of my videos, I'm looking at buy and sell zones of waves, of where you usually find support and resistance within waves, and then using those to find areas where you should find resistance. And the key ones that we're looking at, this whole wave to the upside, we've had a sell-off to the midpoint. So this thin blue line there is the midpoint of that whole wave, found support. Then the sell zone of that wave is up here, with the top side of that up around 2800. And also looking at this whole wave down, we have the sell zone, midpoint and buy zone of that through here, with the area of that sell zone just coming in just below 2800 and going up to, I think, 2866. And I'm also looking at, the actual wave from the low in December, and to give targets on this move if it does fall over from here. So we have the sell zone, midpoint and buy zone of that, and if things do turn back down, we have some clear targets where the market can get back to, which can inform decisions on option strikes to buy, etc. So looking at what I was saying to you last time that we spoke about the S&P, as it was racing up into this zone, I mapped out all of this for you, and have these yellow boxes. This is the lower level of resistance where the market could have fallen over from, and then I have this upper level, which is so that yellow box is really a combination of the other sell zones, and looking at where you'd expect to see some pretty good resistance. And that came in around 2760, up above 2800, 2810 was the area that I was talking about. And you can see the high in the market coming in at 2819, so just above that zone where I was saying you should really be keeping an eye out. And really all of this area, this sell zone of this whole wave down, is a key area where we should expect to find resistance. And another thing to look at is with this weekly chart, I have the 20 period, that light blue line is a 20 period simple moving average, and then that dark blue line is a 10 period exponential. So that exponential one moves quite quickly with prices because it's more weighted to the most recent data, whereas the 20 period simple is just really an average of the last 20 days trading, and it's a very important one. And then we have the Bollinger Bands, so those white lines there That's the 1 standard deviation Bollinger Band, and then the 2 standard deviation Bollinger Band, above and below, the 20 period simple moving average. And you can just see when we have strong moves, and this is just a good point to make for you quickly, is that those Bollinger Bands around that key moving average really are quite important. And if we just look back at, let's say, the crash, we've got this crash here in 08. And if you watch those weekly Bollinger Bands, you can see that we had the failure, and then we ended up rallying up to that area 1 to 2 standard deviations above the Bollinger Bands before the crash really started. And then in the rally, you can see many times where support came in. We did actually crack the Bollinger Bands there before rallying again, but then on the way up, as it's really rallying, that area 1 to 2 standard deviations below becomes constant support until it finally breaks. And then you can see it broke there, and where did it rally to? That 1 to 2 standard deviation above before finally falling over, and then starting to rally again, and we see support coming in 1 to 2 standard deviation below, again, and now prices have broken there, and now we've rallied up into that area 1 to 2 standard deviation above. So this spot where we are now is that danger zone, especially since the market has actually broken the Bollinger Bands on that big sell-off. So that's just an added weight, looking at that 1 to 2 standard deviation area, which lines up with the sell zone of that whole wave down. So there's just quite a lot pointing to this area as a really important area. And it doesn't mean it's not going to keep thrashing around here and even try to head higher, and it could get to the top of that sell zone. But you're looking at this as an opportunity from the short side more than the long side from here. And the targets, if we get, let's say, a weekly sell pivot, so a weekly close below this week's low, because this week created the highest price, you can see there, and that weekly sell pivot in this zone would be a good indicator that momentum is shifting back to the downside. And you could then be looking for targets back to the midpoint. So there'd be a pretty good probability of a move to that midpoint, which is around just below 2600, and even into that buy zone, which is down around 2450. And the way to play it, as I've said many times before, you're looking for that momentum shift in this zone, and can you get into a position where if the market sells off, and let's say you bought some puts there, and then you take profit if the market actually gets there, buy some calls with the profit on selling half of those options, and you can then make money whether the market rallies or falls from that point. So you're only exposing yourself to that initial leg. That's what you're trying to capture. That's the main aspect of the trade, and from there you don't really care whether the market plunges or rallies. And the fact is, there could be a lot of volatility from that point, especially if it does actually head down, and we were to crack beneath those lows. You're looking at a target to the buy zone of the whole wave up since 2016, which would be down around 2000 to 2100. So that would be a big fall, which would be great to capture. So that's it for today. Just a quick one to give you an outline that we are seeing selling pressure from that zone that I've been mentioning, for a while now. So time for traders to sit up and take notice. All right, cheers.